Companies or any company financially. So the topic here is making money or not, understanding companies financially. So before I start the presentation, if I have a quick question, when you think about any company and when you think about the company financials, can anyone let me know what comes to your mind? The first thing which comes to your mind. Anybody? There is no right answer, no wrong answer, so don't worry. We are learning together. Anyone, anybody, anything comes to your mind? No, maybe anything. If you happen to know a company, what is the first thing that if you, for example, have to open, even if you open any newspaper, which some of you must be reading, some Economic Times or the Mint and so on, or the Financial Express, if you happen to pull up and if there is some information about the company financial results or the third quarter, first quarter results or second quarter result could be a yearly financial result, something which instantly comes to your mind, or you can something which you remember reading or something. Anything? Okay, let me help you before we go ahead, because we have to really understand. If let's say example, one of you start a small business. It could be very simple business like selling some product, let's say, and you sell, let's say 100 or something like that, 100 a month, and obviously it costs you some money, and you sell that for some money. So then, what is the basic financial aspect of if you are doing this kind of a business, selling a product quantity, let's say 100. Okay, no problem. Let me help you. So in this example which I gave, the 100, the unit doesn't matter, but here the 100 is nothing but your overall revenue. You're selling 100 quantity of a product, and okay, for argument's sake, let's say you're selling it at 1 rupee per product. It means 100 times 1 is 100. So 100 is nothing but your overall revenue. So revenue is the first term which all of you or all of us should understand when we are speaking about any company. And of course, then the revenue in big companies runs in hundreds and millions of rupees, or in case of global companies in hundreds and millions and billions of dollars and so on. So this is about revenue. So first we need to understand why we need to understand the company financials. First is about revenue. Now, once you know that your revenue of your company is, in our example, 100, now if you have to, if you're earning 100 rupees by selling 100 products for 1 rupee each, what is the second most important thing which you need to understand after understanding the revenue? Anybody? I really want to make this session interactive. So don't feel shy, even if the answer is wrong. Don't worry. Somebody can just unmute and please say. Sorry, I'm in the presentation mode, so I cannot see you, but maybe I'll go back and maybe I'll pick somebody at random in that case. So I can pick somebody's name. May I? Okay, let me see. Anupam Panchal. I'm just picking your name, Anupam. Anything?
Yes, sir.
Okay. Did you hear me for the last few minutes, or you just joined? Sorry.
Sir, I have just joined. Can you repeat the?
You have just joined. Okay. So we started with the concept of revenue of a company. So
Yes,
are
sir.
you aware of this word revenue?
Yes, sir. Revenue
Okay.
in the. Uh, yes, sir.
Yes, yes, Anupam. I can hear you. Go ahead.
सर सर जितना मैं जानता हूँ रेवेन्यू वह है कि जो कंपनी एक जनरेट कर रही है बाय सेलिंग द प्रोडक्ट
Correct. बहुत बढ़िया.
और
Exactly. You're right.
सर्विस.
Correct. So the company जो generate करे, in this case we are talking about money. So the company generating money as a result of selling some product is nothing but revenue. Perfect. Now
यस.
my question is, Anupam, now that you know revenue of the company, what is the other thing which comes to your mind other than revenue? Something related to financials of a company.
इट मे बी प्रॉफिट.
Perfect. So profit, obviously, because, and this is for, thank you, Anupam. So all of you here, obviously, when we are in a business, when we are selling a product, the second thing which comes to your mind is profit. So now maybe I'll ask another somebody else in the room. Now we know revenue. Now we know profit. So what is missing here? How do we generate profit from revenue? Or can somebody give me a very simple formula? How do you calculate profit? In a very simple terms. And this is something which we probably have learned in, I don't remember exactly, but maybe your eighth grade or ninth standard at around that timing. No, not in college for sure.
Revenue minus cost.
Correct. Revenue minus cost. It means your selling price minus cost price is nothing but profit, right? SP minus CP equals to profit, if I remember my schooling days. Can somebody else tell me that yes, you are up to speed on what we are talking? Anybody? Let me take another name. Okay. Manish. Sorry. Not Manish, sir. Nandini, are you with us? No, muted. Okay. Sanat Kumar.
Sir, sir.
Hello, Ji. Can you hear me?
Yes, sir. So can you repeat the question, sir? Some voice problem
Okay.
was there.
Okay. It's not a question. We just talked about revenue, which is nothing but overall money you generate, our company generates by selling a product. Now, also Anupam helped me in understanding other than revenue, there is something called profit. So we came up with a simple, we remembered from our long time back in schooling when we were in our eighth or ninth or tenth standard, selling price minus cost price equals to profit. So do you remember this, Sanat?
Yes, sir.
Okay. So it means now everybody in the room understands what is revenue. Everybody in the room understands what is profit. Let me go back to my presentation. I will not go into the overall slide mode. So this is nothing but the second line in this slide, understanding P and L. Here the word P and L, and when you enter into any industry, when you enter into any organization, you will hear this terminology very often, especially when your company publishes the financial results by quarter or by year and so on. So P and L is nothing but profit and loss. So we just talked about revenue and profit, but in some cases, unfortunately, if your business is not doing well, or if any business is not doing well, it might incur a loss. So understanding the P&L statement of any company is extremely important. And in this session today, we will understand how a P&L of a company is calculated or is understood. So then this brings me to my third question. What is a healthy company? In one word, can somebody say, when we say this company is healthy company, what comes to your mind? But we will speak about it in detail when we go through. So quickly, if somebody can tell me what is a healthy company? Okay, no worries. We will come to that question, that point in a short while. And the last point in this presentation, what we will speak about is how companies raise capital. Capital is nothing but the money, because especially when any company has to start a business, they need money to start the business. But we will see what are some of the options available for any company to raise the capital. Okay, let me go through the second page. Now here we will go through this exercise by having, we'll go through this exercise by having a live session on one of the business case. Let's say we are selling audiobooks. Sorry, everybody can hear me? I hear some background noise. Maybe somebody has to mute. Okay, I think we are okay now. Okay, so let's say we are in the business of selling audiobooks. So now let's see how to understand the financials of our company, which is selling audiobooks. Can somebody tell me what is exactly audiobook? Have you heard this term? Anybody?
Sorry,
Something? Yes,
sir, it's
yes.
like the recording of ebook. Hello.
I'm sorry, I couldn't hear you. Maybe are two people speaking at the same time? Maybe can one of the you speak? Who's speaking? Sorry, I didn't get your name. Go ahead,
Yes,
go ahead.
sir.
Somebody was speaking. Yes, yeah.
Sir, it's me Anupam. Sir,
Okay, Anupam.
ऑडियो ebook या फिर a phrase that is spoken by someone from a book
No,
is a
not the phrase. It's the first thing what you said. It's an ebook, but it's an audiobook. It means you subscribe to some company where you can download some audio, either some speech or some learning subject, wherein through audio somebody is speaking on the other side. Only you, since you subscribe to that website or the company which provides you that service, only you can hear that about that particular subject. So that is nothing but the audio book. So instead of having a physical book in front of you and you read those 100 200 pages or something, you have to just subscribe here. You get that file over your computer and you hear it. This is nothing but audiobook. Is it okay? And this is not only Anupam for you, for everybody. Can somebody tell me you understand the meaning of audiobooks?
yes, sir.
Yes, sir.
Okay, thank you. Okay, so we are in the business of audiobook. Okay, this is one start point. Now, most important thing, and this is what you see in the graph, is very, very important for you to understand that when we are in the business of selling a product, please remember that when you start a business, I will go. Initially, your company will not be turning profit immediately. Can somebody tell me why? Let's say you got some amount of funding for starting a company. That amount could be anything. It could be, let's say, 1 lakh rupees for to start with, as example. And then you start making this audiobook business. So what are the first things when you, before you start actually selling the audiobook to your potential customer, what would you start doing when you want to do this business as a first step?
So first step will be, sir, by knowing the customers who needs audiobooks,
By
or
knowing the
what will
customers whom you see audiobook, it means you need to do maybe some kind of a market research, MR,
yeah,
to
apply.
understand that depending on the topic, what you want to start this audiobook business with, you need to understand who is your customer. Perfect. So you do some market research. And then let's say you got some data and you know that today there is a market, based on market research, there is this topic A or topic B or topic C, whatever, where customers are interested. So, okay. So to do this market research, obviously you need to spend some,
Yes, sir.
what do
We
you,
have to.
you have to spend time and you have to spend some money, because you may have to ask somebody else who is professional in doing this kind of a market research to do that for you, right? Okay, so you spend time and you spend money by hiring some company to give you that information. Okay, so this is first thing. Then after you get that information and you know the subject, now what do you do?
good quality speakers
Perfect. So you need
to
to
decide.
understand. Perfect. You need to understand who are those good quality speakers, who are all the people who that particular subject and the relevant people who can make that kind of an audio data or audio file for you to prepare your files. Okay, so it means you need to maybe ask some 5, 10, 15, 20 people who are related to that topic to do it for you. So of course, they're not going to do it for free. So you will have to pay them some money, some royalty or some kind of a one-time money. So anyway, to keep it simple, once we are trying to bring a product to the market, you have these kind of initial expenses. So you need to spend that money. Then when you get actually ready to start selling the product, when you start selling the product, since you have already incurred this kind of money to begin with, when you start selling the product, do you think your first product or the first few hundreds or thousands, depending on your business case of product, will earn money or no money? Not, you will not earn money.
No money.
Why?
So we will earn money but not profit.
Okay, you're right. And this is exactly what is shown here on these two curves. You see purple curve in the bottom and green curve on the top. So in the initial phases from left to right, to keep it simple, you do some product development. Product development includes, in our case, market research, getting the speakers who know about the subject to create the so-called data or the audio file and so on, so on. But not all. Then you need to do advertising, you need to do some marketing, you need to probably publish, or you have to let the people who are watching some shows on TV or laptop or phone that this kind of um, uh, audio files are available with your company and so on, so on, so on. So some company will then subscribe to your company to download that audio file. So it's all part of product development and so-called introduction or launch. So this happens in the first two phases, as you can see in the left. While this is happening, you already have incurred cost. So even though you start selling the product for the first few maybe years, you will not earn any net profit. You will earn money, yes, as you said rightly, but you will not earn net profit. However, and this is very important now, if your business is growing, which is in our example on this screen, it is growing because the sales, as you see, are growing from left to right. And it hits a peak at some point when it matures, but up until that point it matures, your sales are growing. And then gradually, if you look at the bottom line, which is the profit curve, the purple, initially, yes, you're not earning money, but at some point you will have a break even. And then after that, you will actually start earning profit because your sales are also rising. All your costs which you have incurred has been covered through the initial sales revenue, and then you actually start earning profit. And this is how the typical cycle of a business works. So you can never imagine, and of course here we are talking about for profit company and not for non-profit company. So let's speak about for profit company. You will never earn money in the initial few phases or years of your business, but you will earn money after some time. So please keep this in mind in any business. Okay, now next point. I want to introduce you to two terms here. It's also written in the previous slide. So something which is called as a top line of a company and something which is called as a bottom line of a company. Can somebody tell me what is the top line of a company? We just talked about it. Okay, no worries. The top line of the company is nothing but it's coming in the second sheet of a sample P&L statement. Top line of a company is nothing but the revenue. So we all understood what is the revenue of a company. That is nothing but the top line of a company. Now the bottom line of a company is nothing but the overall profit. Now this brings us to this slide where it gives a very simple example of a sample profit and loss statement. So here on the first line, you see the revenue of company A, let's say it's our audiobook company, and the revenue is 250,000, let's say rupees, which means 2,50,000 rupees is the revenue. Now, the cost of the revenue is 50,000 rupees. It means our gross profit is 2 lakh rupees. But in addition to this, can we say that this is nothing but the profit of our company? I do not have any other expense. No. Why? Because as you see at the
No, sir.
bottom, can somebody say why? It's on the screen here, but can somebody say why?
Because there are expenses, operating expenses,
There are
such
operating
as
expenses. Yes, because in this case, the example is given in very simple terms, operating expense for continuous sales and marketing. Because even if you do your sales and marketing to begin with, in the initial launch of your product, it doesn't mean you can do and stop. It doesn't happen that way. Even today, after so many years of advertising, you still see advertisement for, let's say, Thumbs Up or advertisement for Colgate, toothpaste, and so on. Everybody knows Thumbs Up, everybody knows Colgate, but they don't stop advertising, right? They keep on finding new brand ambassador and keeping on having some unique novelty in their advertising campaign, so on, so on, and they still continue to do the advertising. It means it's part of sales and marketing. Likewise, research and development. Can somebody tell me why we need to continuously do research and development for any product?
for the consistent of the product.
What do you
Means
mean by
so
that?
means any product can मतलब टिका रहे किसी मार्केट में for long time के लिए. So we have to do the research and development work. Means,
Mhm. Yes, yes, you're almost getting
sorry.
there. Yes.
So
That for
means
an
we have to
upgrade.
according to the uh, product that product is means fulfilling the needs of any customer or
Correct.
not.
It means what essentially what it means. I'm sorry, somebody else also was saying something, so I will wait. Who was saying something else?
To bring the changes as the trends.
Correct. Perfect. So I was about to say that. So you have a product, and as usual, the customer behavior or the customer expectation of a particular product keeps on changing. It means to be in line with the competition, to be in the business of whatever business you are in, you have to understand the changing customer expectations or customer need, and based on that customer need or expectation and some forecast, you need to do some research and development. So you need to spend money and time on hiring some people who are working in R&D and keep on doing some new research and development. I'm taking an example, very simple example of Colgate. Colgate initially launched with a very simple product, the typical white toothpaste, which most of us who grew growing up know. But slowly, because some other competition and some customer like to have a flavor in that, suddenly the company started introducing different flavors of toothpaste. So Colgate, of course, had to also reinvent themselves. They also had to spend more on research and development because they knew that if they only stuck to the white non-flavored toothpaste, they will not be in the business after some years. But today we know they are in business. It means they also did the research and development in line with what the customer was expecting or in line with what the customers are expecting. This is research and development. On top of that, there is nothing but what we call as G&A, general and administrative expenses. It means that in any company, when you are having a company in a physical location, you need to spend, either you buy the property or you lease some property or a building or a floor in a building. So it means all the general and administrative expenses towards the rent or the lease, the lighting, the AC, the fans, and so on, so on. Those are nothing but the daily and monthly operating expenses. So all these expenses, if you make a total, this in this example today, the operating expenses total are 140,000. It means even though your gross profit is 2 lakh, your operating expenses are 1,40,000. In that case, the difference between your gross profit and total operating expenses, in this case, it happens to be how much? Can somebody tell me? Simple mathematics.
60,000.
60,000 is nothing but what is called as a net profit. So this is very important term to understand what is your net profit. So there is always a difference between a gross profit and a net profit. So when you look at any financial statement of a company or even in the newspaper, try to look for these terms: revenue, gross profit, net profit. And in many of the financial statements, if you look at it in very detail, you will still find these sales and marketing or research and development, G&A, and some other examples of these operating expenses. So the net profit, which in this case is nothing but 60,000, is nothing but the bottom line of the company. So the top line of the company is 2,50,000. The bottom line of the company is 60,000. This is very important to understand for any financial understanding the financials of any company. So, okay, I will not, in the interest of time, I will not go through this in detail, but this is just what we talked about just now. I want to directly go to some exercise which will give us the next. Okay, here. Now, having understood, I'm just taking a pause. Is everybody with us? Have everybody understood the meaning of profitability of a company, or a profit, revenue, sales, gross profit, net profit? Everybody understands?
Yes,
Yes,
sir.
Can
sir.
I? Yes, sir. Anybody don't understand? Still confused? We can take a pause and rediscuss. Anybody? No, we are okay. All good.
Yes, sir.
Okay. I take your word. So let's go. Sorry, can somebody please mute because I'm hearing background noise. I think Bhide, can you please mute? See if I can mute. I can't. Okay, we'll go ahead. So now that we understood profitability, I want, or at least profit, I want you to understand. We take a pause. How do we mute somebody? Does anyone know? He's muted. Sorry. Okay. Okay. Now I want to touch base on the second aspect, which is nothing but the growth of a company. So here, if you see on the left-hand side, the meaning of growth is any business wants to expand and seek options to generate more revenue is nothing but the growth. Very simple. You want to expand your business. It means you want to increase your revenue year over year. That is nothing but the growth of a company, right? Now, on the right-hand side, we have a small exercise and a small worksheet. In the year 2021, our company selling audiobooks had a revenue of 180 million. In this case, it is dollars. Okay, very good. Then in 2022, our revenue was 233 million euro or dollar, right? So before we go to the net profit part, can somebody tell me the answer, or how will you find the answer to the question which is at the bottom of the right screen, the first question? What is the YOY is nothing but year on or year over year growth percentage? Can somebody tell me how do you find that? Can you understand the question?
We simply take the difference of the 2 years and divide it by the previous year.
Perfect. Very right. So essentially, if you have to calculate here, what will you do?
Sir, it's 22% growth.
Okay, you calculated by okay. If we had time, we would have done the calculation here. But since we have no time, what you answered is perfectly correct. Sorry, who was the one who answered right now? I cannot see you, but Anupam.
Yes, sir. It's me.
Okay, thank you, Anupam. You are perfectly right. So here, what you do essentially is you had 2021 revenue of 180 million. Your 2022 revenue is 233 million. So the first information which is important to know is your revenue has increased from $180 million to $233 million. It means your growth, because we have increased, your growth percentage is, you take the difference 233 minus 180, it means 53, and then you divide out by the initial year revenue, which is 2021 revenue, which is 180 million. So I assume that it comes to 22%. Okay, perfect. I'm not doing the calculation right now, but
29.
29. Okay, so it comes to 29%. It means when you hear or when you read a company saying that our year on year or YOY growth was 29%, this is how it is calculated. Now let's go to the second part, profit. Now let's see what happens. For your 2021 year, your net profit was $30 million. But in 2022, your net profit is $28 million. Which means, before I go to the second part of the question, what has happened? Can somebody tell me?
Profit has decreased.
Net profit has decreased. It means that even if your revenue of a company has increased by the 29% we just talked about, the net profit has actually decreased for whatever reasons. We will not go into the detail of why. So please understand that when you see the financials, don't assume that if a revenue of a company increases, profit automatically increases. No, it may increase, yes, but it may not increase, like in this example. Okay, so then the question which we have to answer now is, so first of all, what is the 2022 profit percentage? How do you calculate that? And the question here is 2022. Can somebody tell me what is the profit percentage for the year 2022?
Around 8%, 8.58%.
How did you calculate that?
So we took the net profit of 2022 year, that is 28 million, divided by its net revenue in the same year, that is 233.
Perfect, correct, very good. So that answer came to 8%, right? Sorry, you said 8%. I'm not calculating, but 8%. Okay. So then the third question and the last question to understand. So it means, what is the percentage change in profit? The meaning of this question is percentage change year over year. So 2021 to 2022. How will you calculate that? You have two steps.
Minus 6.66%.
Your answer is correct. Can you explain to all of us how did you calculate that?
Sir, 2 million profit has been decreased since the last year, and so the difference in revenue, that is -2 divided by the revenue of the previous year, that is of the current year, that is 30 divided into 100, that will give us 6.66% in negative.
Not exactly, because I'm not calculating here, but no, that's not how you calculate it, to be honest. What you need to do, since we calculated 2022 profit percentage of dividing out the net profit divided by the revenue of that year, you also do calculate the 2021 profit percentage. It means 30 divided by, in our case, 180.
Yeah.
So now you have two numbers, one number which is 30 divided by 180 profit percentage, and then for 2022 you had 28 divided by 233, and then you take the difference between those two, and that is nothing but a percentage change in profit. So quickly, because we want to understand, in 2021 what was profit percentage? It's simple, 30 divided by 180, so it is 1 by 6, so around 16%, right? Everybody with me?
Yes, sir.
16%. So the net profit percentage in 2021 is 16%. And in 2022, somebody did the calculation before, 28 divided by 233. How much does it come to?
Around 1 by 8.
Yes, which means around 12%, something, right?
12%.
12%. So your profit percentage decreased from 16 to 12%. So your percentage change in profit is not -6, but -4.
-4.
Okay. I'll take a pause. Everybody with me, everybody understands what's happening, what
Yes,
we are
sir.
doing here?
Yes, sir.
Yes, sir.
Yes, somebody else in the room? I see we have 51 people, so some students or somebody in the room. All okay? So far, so good?
Yes, sir.
Okay, thank you. Great. So we learned now how to calculate growth, how to calculate profitability. Extremely important for us to understand. Since we are short of time, I will just give you one quick or two quick things. One is the rule of 40. It means that when you are running a company, and obviously we just talked about growth percentage and we talked about profit margin percentage. The sum of the two, as a rule of thumb, here it is called rule of 40. The sum total of two must be at least 40. It means if your growth is, let's say, 28%, but your profit growth is only 12%, that's fine, because as a total, your 28 plus 12 is 40. Or if your growth is only 10%, but your profit margin the next year is, let's say, 30% or more than 30%, it's also fine because your sum total is still 40 or more. So this is just a very thumb rule which is prevalent in the industry. It is not like any particular, it's not like every company follows this or every company strictly only tries to achieve the 40, nothing like that. Every company will have their own business strategy, business goal. Some companies may purely prioritize growth versus profit, especially if it is a new company and in a very new technology or a field. Over a 3 or 5 year period, that can happen. And then after that, they move to the goal of profitability and so on, so on. So every company will have their own business plan and strategy and so on. But we don't get into that in this discussion today. But just as a rule, please remember the 40 rule. So once again, growth percentage plus profit percentage should be 40. If means if it is less than 40, if your growth percentage is only 10 and profit percentage is also, let's say, 10, your sum total is only 20, it means you are not a healthy company and not a growing company. And this will raise an alarm to your potential investors in the company. If you want to go to some investment company, which is the last part of this presentation we'll talk about, and ask for more funding, if they see here that your growth and profit margin is much less than 40, most likely they will refuse to fund more or even to fund anything in the first place. So this is usually the norm in the industry. So since we have only few minutes, we will skip some of this and I will directly go to the topic of understanding this topic, which is 2 or 3 slides, but it will give you the perspective. So now we have we understood profitability, we have understood revenue, we understood how the growth happens, the percentage growth, the rule of thumb of 40 and so on. Now let's take again a couple of steps back and say, if you want to start a business on your own, of course, as we said before, you need money. So where will the money come from? What are the sources of money? And on this slide, you will see some of the examples of how a money is generated or how a money is raised for you to start a business. The first line, very simple to understand, friends and family. I want to start a business. I approach my family members, whether it is my mother or father or uncle or aunt or a cousin, or I go to my friends and say, I have some plan, I have some business case. Can you fund me or can you give me some funds, maybe 1 lakh rupee each or whatever it is, to raise funds for me to start my company? This is friends and family. And in return, of course, I guarantee that we will return the money with some additional profit, because obviously nobody will give you money for free. This is nothing but what we call as crowdsourcing. Then there are traditional methods for raising a money, like you approach a bank and you take a bank loan against some guarantee. So typically when you take a bank loan for starting a business, you have to probably keep some guarantee to the bank loan. It could be some property you own or some house or something like that. So this is nothing but a bank loan. Or if you have some shares, you sell those stocks to the public. If your company is also a listed company, you sell the shares and raise money if you're already a publicly listed company. The last 2 points are very key to understand, which is more and more you start reading today's newspapers and magazines and articles, you will see this very often. Either through a VC funding, which is nothing but venture capital funding, or a private equity. And there is a very small difference between the two. The venture capital funding is usually in a smaller amount for a smaller number of years. They expect the return in smaller number of years. But a private equity is usually a bigger amount. Exactly, it's difficult to say, but let's say 400, $500 million and above or something. And it is spread across many years. So they are a big companies willing to wait for those many number of years for a company to generate profit and start giving the return. But a venture capital funding is usually for short term and smaller amounts, let's say 100,000 rupees or 200,000 rupees, something like that, because somebody wants to start a business in some very niche or a very unique area to quickly bring some product to the market and start selling the product and generate money. So it's very important to know what these two terminologies are. Today, because of lack of time, we don't have the time to go through the detail of what a VC funding in and private equity funding is. But these are some of the methods to understand how to raise money. So we are running out of time, but this is nothing but quickly what it explains: venture capital on the left hand side, private equity on the right hand side. Okay, the key thing to know is, as it's said, as it is said in the bottom, the venture capital company, which usually is a $10 million or less money invested, but a private equity is much more, 100 million or more. But the companies who are a venture capital companies or a private equity companies are essentially it's an organization in itself which lends this money to potential new entrepreneurs. Have you heard the word entrepreneurs, everyone?
Yes, sir.
What does it entrepreneur mean? If I say you are an entrepreneur, it means you are or have just started a business on your own for something which is very unique or a niche product or a technology. Yeah, that's nothing but the entrepreneur. Okay, so since we don't have time now, I think Abhijit is on the line. Is it? Hello, Abhijit, are you there?
Yeah, Abhay, I'm here.
Hi. Sorry, we had some network issues, so we
No,
started
Abhay,
around.
no, if you need 10, 15 more minutes, that's fine.
I can take 10 minutes more. Okay.
Yeah. So I ask the students though, so folks, I don't want you to rush through some of these key concepts. So do you guys mind if he takes 10 more minutes and then we stop at around 5:10 or 5:15? Is that okay?
Okay, sir.
And we'll try not to keep you interested and not bore you. Don't worry.
Yeah, and I will not take more than 10 minutes, promise me, because we are just about at the end of our session, but I will need, thank you, Abhijit. I'll probably take about 10 minutes more. Okay. So I will go to the, give me just 1 second. Yeah. I want to quickly explain, not very detailed, on some of these terminologies, which are very important. With some of them we already went through. Of course, revenue, we talked about revenue. Then there is something called as COGS. It is nothing but cost of goods sold, as you see here on the second line. So in any profit and loss statement, you after revenue, you will always see the cost of goods sold. It means the costs which are directly associated with the core revenue production. It means you are making a product. To make a product, I'll take the example of an automotive car, right? We all buy a car. So we buy a car. So we pay some money to buy a car. But the manufacturer of that car will actually spend money to buy each individual part or a component in that car to build a car. Any car company will buy those from some other suppliers or some other vendors. So for them meaning, let's say a Mahindra or a Tata, they are selling the car to you, but they themselves are buying all the parts and components which are required to build the car from other companies, typically suppliers. So for them, a Tata or a Mahindra, it's nothing but there is a cost associated with buying these parts or components. It is nothing but the costs. So obviously, as we spoke before, the revenue Tata, when they sell one Indica or a Indigo, and they generate revenue, but they have spent on the component parts buying through all the suppliers. So the net difference between them, we said, is gross profit, revenue minus costs. Then we said operating expenses. We learned about that. What are your operating expenses, including sales and marketing, G&A, and so on. So then the gross profit minus these operating expenses is nothing but today it is EBIT. So it is nothing but, in simple terms, it is operating income. So this is EBIT. Then there is also something called as interest expense. So it means as a result of debt financing, some periodic payments have to be made, which is nothing but it's not a direct cost, but it is an indirect cost for a company which they have to show on their balance sheet or on their company statement. So you need to still deduct it from your operating income, and then it becomes nothing but a pre-tax. So that is nothing but EBT minus interest expense. It is, sorry, EBIT minus interest expense. So it is EBT. And last but not the least, before we get to the bottom line, is all the taxes, because even the companies, like we all have to pay taxes to the government for, in a professional world, when we earn money, there are some mandatory payments which any company have to do to the state government, city government, local government, and so on. So after these taxes are all paid up, then your final bottom line of the company is nothing but net income. So there are, we talked about revenue, gross profit, and operating expenses, but please bear in mind there are some other expenses which you will typically see in a company profit and loss statement. And this is just a simple explanation of them. Okay, so one homework, sorry, I have to go to the next slide. It's gone back. And don't do it now, but let's say when you have time, please do some research, and then please try to answer these questions. You can write it down, and then you can just exchange between your friends or with sir on some of these which we talked about and what you understood, just in your terms. If you write what is the top line, what is the bottom line, why you think it is important, what is EBITDA, what we just talked about in the last slide. Then there is something which we didn't talk about today, but what is valuation? What is the valuation of a company? It's of course an explanation by itself, but when you are having a company, there is something called as some external auditor will come and they do a valuation of your company in terms of the financial health of the company. And this is also extremely important to know. Sorry, we'll not go through it today. Then another important thing is unicorn. Has anyone heard the name or the word unicorn?
Yes, sir, in Shark Tank.
Sorry, what is the answer?
Yes, sir, in Shark Tank, we have heard that.
Yes, okay, perfectly right. In the business world, what is unicorn? Do you know?
Ventures having valuation of minimum $1 billion.
Absolutely correct. Yes. So when your company it's not valuation, but when your company earns a revenue which is more than 1 billion, as you rightly said, you are a unicorn. Your company is called a unicorn. It's just a terminology. But thank you. Thanks for the answer. Then in addition to that, there are exit strategies. For example, there are exit strategies of a company to stop a business if the profitability is not in line with the expectation, or as we spoke before, the growth plus profit is not reaching the 40 goal and so on. Then there is also related to funding, as we spoke about the venture capitalist and the VC and other forms of raising capital. There is something called as the series funding. It's called Series A, Series B, Series C, Series D. Each of them have their own meaning. Finally, IPO. Has somebody heard the word IPO? Not IPL, IPO. Initial public offering. So today my company is a private company. Tomorrow, if I say I want the company to go public, It means I want anybody in that country, in India, let's say, to buy shares or invest in my company through equity. It is nothing but my company goes public, so I start an IPO. I do IPO, initial public offering. And then the company gets listed on the stock exchange, and then there is some price of that stock of my company ABC, whatever it is. So if you want to know the stock price of company, just go to Google, say stock price of let's say Infosys or any company, you will hear that, you will get that. And last but not the least, you always make money if you have stocks in a pre-IPO company. So these are some just few questions, no need to answer right now, but when you have time, think about it and write answers, and maybe it's a good idea to exchange this kind of information between you and your friends when you have some free time. Okay, I stick to my time, so it is 10 past 4. Any question, any comment, anything which still as you have in your mind, which we can spend a few minutes on before we close, and I hand over to Abhijit. Anything? Sorry, we had to rush a bit, but thank you. Some of you were really very responsive, but I would like others also to say something if anybody.
Sir,
Yes.
sir, is it important to first like the company has to give IPO for entering the stock market?
Yes, because if you are starting a new venture or business as a private company, at some point, if you want to, as I said, if you want to raise additional funding or you want somebody to invest in your company through the shares or equities, you need to have your company go public. So the means of going from private to public is nothing but through the IPO.
Okay, sir. So it's like a gate for entering that.
It's a process, it's a methodology to
Okay.
move your company from private to public, essentially. Yeah, it's
Okay,
like a
sir.
gate,
Thank you.
but you have to go through it. Yeah. Abhijit, you want to add something before I hand over to you on this topic?
No, I mean, this is a this is a fascinating topic, guys. And the last question you asked, right? So it's a gate from what happens when somebody goes from private to public, right? What does that even mean, right? What are you doing essentially? What you're doing is basically offering the shares which you hold, or the people who are today investors in your company, what they're holding, they want to make money, right? So they sell their shares to the public. Only then the company can raise money finally, right? So let's say you start a company with 100 shares. It's a private company. 10 are yours, 10 are with your friend, and 50 with some investors, and 30 belong to the company. Let's say common stock. We call it common stock, right? Now, when you go public, what are you trying to do? You're trying to raise money. So you're trying to say that out of the 100, I'll offer 50 to the public. Anybody can buy at a certain price. And that's how you raise money. So basically, essentially, as Abhay was saying, right, it's one means of raising money. And a lot of companies aim to become public finally, because then you get listed in the stock market, right? So that's what this process is. So yeah, no, I think Abhay, I think this is I highly encourage all of you guys to do something very simple, right? Go and just look for P&L statements for publicly listed companies, right? Look for Mahindra, Tata, whatever companies you're familiar with, Colgate, Hindustan Lever, or a software company like Infosys, TCS. While this fresh in your head, go to Google Finance, Yahoo Finance, and just open their balance sheets. And it's all available. And just see whether you understand the terms now. Because when you join a company, right? If your company is private, you're going to ask the question based on that. Though it is not public, you won't have this information on the net. You can still ask these questions saying, hey, well, I want to know what is the cost of goods sold. You can. So try that exercise when you do on your own. Sit with friends. It's a good exercise to do. So yeah, that's about it.
Thank you. Thank you, Abhijit. Okay, so uh, I will sign off. Thank you very much for listening. I will probably stay for some more time to hear Abhijit, but thank you all. We move to the other topic. So over to you, Abhijit.
All right, thank you, Abhay. So, hi everybody. Great to talk to you guys again. I think, I don't know how many of you guys were there when I was in Kota. I had a great time with you guys. So hopefully, we can keep the fun going. So I have to present. So one second. Where do I share? Right. Okay. One second. Let me shoot.
Bye.